Okay, so we are going to understand the type of account. Okay, so there are actually three types of accounts. First one is first one is real account. Okay, which we are going to understand, and the other two are nominal account and personal account. Okay, so you can write it down that what I am going to write. Followed by that, we will understand it through a simple example that why do we open real account or why do we need real account. Okay, it is the type of account that is never closed to another account, and it is also carried forward from current financial year. Okay, current financial year to next financial year. So we have written the actual definition of real account. Okay, now we will highlight the main characteristics of real account set so that you will be able to identify that which is the real account and which are another type of account. So first of all, the characteristics, it is never close to another account. So you can infer the never close to another account like it is never transferred to another account. Okay, because at the end of financial year, what we do in real world, that we transfer the balance of we transfer the balance of temporary accounts to some another account. Okay, we will learn it also. Okay, when we will face such problems, however, you can take it like that it is never close to another account. First characteristics. The second one is it is also carried forward from current financial year to next financial year. Okay, so this is the most important characteristics which I have highlighted with the blue pen. However, we will take example now. So what are the real accounts? Actually, fixed asset. Fixed assets are those machineries mostly which we which the business entity purchase to produce saleable goods to the customers. Okay, and inventory, or in general we can say assets, liabilities, because assets will include all type of assets: tangible, intangible, fixed, non-fixed, current, non-current. Okay, and same case with the liabilities also. So what I have written in example, the four types of accounts, okay, will be always be real account. Okay, so an asset, let's say suppose we have, or we can say ABC company has paid advance insurance. Okay, now what happens, such advance payment of insurance, okay, for next year in current year. of $500. So $500 is for insurance for next financial year. Next financial year. So this $500 is for next financial year. However, it has been paid in current financial year. So $500 will be considered as an asset, and we can also take it like that, that ABC company practices to pay insurance expenses in advance. So in that case, every year the payment of $500 will be paid. Okay, in that case, $500 will be considered as an asset for every financial year, because the ABC company practices the same. Okay, if $500 will be considered as an asset for every financial year because of paying it in advance, then it will never be closed, or we can say it will be carried forward from one financial year to next financial year. Because we have written an example also, assets are one another type of, or we can say for assets we open the real account. Okay, so for the current question, our solution matches with choice A. Okay, however, you can write down sheet 1, sheet 2 onto your notebooks for future reference. So but the choice A will be correct. Okay.